Hey everyone, welcome back to Corporate Decoder. Today we're diving into Smart Sand's latest 10K report, their yearly financial checkup. Let me tell you, this one's got a plot twist worthy of a daytime drama, but don't worry, I'll help you understand it in a way that won't put you to sleep. We're talking shifting sands, not just the kind they sell, but also in their market, their debt, and even their legal battles. Buckle up, it's going to be a ride. So, what's the headline here? Smart Sand is navigating a pretty tough environment, but making some moves to stay afloat. They're a company that digs up and sells frac sand and industrial sand, which are used in oil and gas drilling and various industrial applications. Think glass making and foundries. Their success is tied to the ups and downs of the oil and gas industry, and that's been a roller coaster. One of the big stories here is about risks. These guys face a lot of them. The oil and gas business is very cyclical, meaning it booms and busts. Then there's competition, new technologies that could make their sand obsolete. Heck, even the weather affects their ability to dig and deliver sand. The cost of energy, like natural gas, is a major expense for them too. If those prices spike, their profits take a hit. There's also some dependence on access to the railroads. A train delay can mess up delivery schedules and cost them money. And we can't ignore the big picture with global events such as conflicts in Ukraine and the Middle East. These create uncertainty in the oil and gas markets. Actions by OPEC, that cartel of oil-producing nations, also play a part in their stability. Okay, let's talk about what Smart Sand actually does. This company has two main operating areas. The first is the sand segment, which is just digging sand up, process it, and sell it in the open market. They've got mines in Wisconsin and Illinois, and they sell both through long-term contracts and spot sales. Then there is the Smart Systems segment. Here the company is renting out and maintaining equipment to store and manage sand at drilling sites. Think of these as temporary sand container systems for oil drillers to store sand more efficiently. Looking ahead, Smart Sand has a strategy to make their business more stable and increase their value. Their main strategy is to diversify their customer base. They created this IPS thing I mentioned, which is targeting other industries that need sand. Stuff like glassmaking, foundries, construction, etc. These aren't as tied to oil prices, so it makes their revenue a bit more predictable. The plan is to also expand their logistics network so that they can deliver sand at lower prices. The company also wants to cut costs across the board. They run 3 sand mines in Wisconsin and Illinois. The largest output comes from their facility located in Oakdale, Wisconsin. It processes about 5.5 million tons. All in all, the company has the ability to process 10 million tons of sand yearly and believes that they have access to 60 years' worth of sand in Oakdale and more than 100 in the other mines. These are called reserves, and they are obviously very important because you can't sell sand that you don't have. Let's talk about the numbers that matter. Looking at the financials, the value of things that the company owns is $341 million, while the value of what they owe is $97 million. So right away, we can see this as a company with a heavy industry with a lot of equipment, and all that equipment costs a lot of money. Now if we look at the earnings numbers, that's the important stuff. You can see sales jumped by 6%, which is good, and that was mostly due to higher volumes of sand sold. The price of sand dropped a bit, so that increase was needed in order to sell more. And it appears that they are good at managing their debt, because they recently refinanced the $20 million loan with a new $30 million loan. They did mention that capital expenditure for the next year should be about $13 to $17 million, and I think they have plenty of liquidity to operate well for the next year. If you scroll down to a table titled Maturities of Long-Term Debt, you'll see a schedule of the debts and when they are due. Smart Sand appears to have debt and lease payments under control for the next 5 years, and this gives them some financial flexibility for any potential acquisitions or investments. This company is very dependent on its customers. If we scroll down, we'll notice that about 32% of their revenue comes from just one client. About 84% of the company's account receivables come from just 4 customers. That means if one of those customers goes bankrupt, this company is in trouble. So there's a lot riding on a few key relationships, so they need to diversify and make sure these clients are stable. One thing that's emphasized throughout the report is safety. This is super important in mining. They're part of programs that hold them to higher standards. But the thing is, they acknowledge that any accident could hurt their reputation and cause them to lose customers. Another dark cloud is about the health risk around the dust their mines create. It can lead to silicosis, a lung disease. People are worried about it, and that could discourage companies from buying their sand. So, what's my take on smart sand? Well, they're in a tough spot, riding the waves of the oil and gas market. Their strength lies in the quality and quantity of their sand, their logistics network, and the push to diversify into industrial markets. But they are heavily exposed to the cyclical nature of the energy business, potential health liabilities, and most importantly, dependence on major customers. If Smart Sand can successfully grow their IPS business, manage to keep debt under control, secure customer relationships, and continue to innovate, there's real potential for long-term growth. That's it for today's Corporate Decoder. What do you think about Smart Sand's prospects? Let me know in the comments. Don't forget to hit that like button and subscribe for more deep dives into the world of business. Thanks for watching.